What up, guys? Good afternoon. Good afternoon. What's going on? Tomorrow's a big day. Does it feel like a big day? Not really. I'll be honest with you. I don't think tomorrow's just too much emphasis in terms of kind of volatility wise. I think right now you could say that everyone's kind of positioning themselves to either be in some kind of puts right now, or they're trying to time the top to enter puts, whether it be tomorrow or the day after. I think that's pretty much the bigger thing right now, for pretty much retail traders across the board right now. A lot of them, from what I can see already, are trying to get an early start in an entry for puts. And I saw a few people in our chat, they took it upon themselves to try and get a starter entry on puts, thinking that maybe we end up pretty much dropping off of CPI data tomorrow, which it is certainly a wild card. But as I kind of jump into things real quick, kind of jumping into, just looking at the charts. Of course, we do have the CPI data is going to come out roughly 8:30 a.m. Eastern tomorrow morning. That's when we're expecting data, so it'll be tough to pretty much get any kind of action going before market open. But other than that, getting into ES here right now, what you can basically see right now is that I do have our downtrend resistance off of our daily chart. That's that black line that pretty much goes across. So you basically see we're kind of surging almost about what maybe a quarter of the way that's still left to pretty much get into that downtrend resistance, but a lot of hurdles to get through right now going into tomorrow. So three key levels pretty much stand out to me. The first key level is our support level at this 4104 mark. That's a very key level. If you actually saw, we had that little morning push, and that was exactly the same level that we basically retraced down towards, and we ended up trying to build a base before we saw the end of day squeeze. So that 4104 level, that's basically what our support is that we're looking at right now. Otherwise, upsides that I'm potentially looking at is that off of the daily, we have the 200-day EMA that's sitting at 4167. And then overall, if we do end up getting a continuation of the push, I'm looking at an overall PT that's standing at 4194. So that's pretty much the two key levels that I have most notably is 4167 and 4194. That all depends how much of a squeeze this potentially ends up being. If we end up getting somewhat of a gap up, we just rip right off of the data, and that may end up being one time, one leg up, and then that I would say that's 4167. But if we see a bigger squeeze, a bigger price action out of this, and we see a bigger bull run tomorrow for most of the day, then 4194 I don't think is out of the cards here, and that'll likely be where we see that mental number, which I've heard quite a lot of chatter between FinTwit, between Twitter. I think that 420 level on SPY, pretty much equivalent, has been what has been pretty much the big marquee number that everyone has on their watches. So 4194 wouldn't not surprise me, but 4167, if you were looking to pretty much get that starter entry inputs, I think that's ideally maybe where you look to pretty much enter. And as always, kind of give yourself a bit, no, a lot of time and expiration, and make sure you don't go out to the weeklies. All right. So that's pretty much sentiment wise why I would look at that. Otherwise, below the 4104, that's when I do expect things to pretty much get volatile. It'll likely be one of those kind of days where we're going to see SPY pretty much down, whether it be 5 points, 7 points, maybe even double digits. But we'll likely roll under 4104, and then bigger level to pretty much watch will be around that 4059 level on future. All right. So that's pretty much what I would say is obviously the window to the upside is a lot tighter, but once we start to roll over and we start to drop, it's likely going to end up being an elevator down, and that's where things are just going to start get progressively ugly. All right, Lobo, what's going on, my guy? So that's pretty much looking at that. Now just my personal perspective, I don't necessarily expect us to drop tomorrow. I do expect us to push those two levels I said to the upside tomorrow. What I think is likely going to be pretty much catching us maybe off guard, if you want to say maybe retail trades are not necessarily prepared for, is that one we haven't necessarily got pretty much reactions out of jobless claim and retail data for the most part. That's where we actually have coming out on Thursday. So I'm kind of getting gauging my attention towards Thursday's data, economic data that's coming out, with jobless claims and retail data coming out both at the same time in the morning. I'm looking at that to be potentially our downfall. Obviously, that's going to be contingent upon whether how the market reacts tomorrow. But if we end up continuing to act and respond well to pretty much our inflation data tomorrow, that's where I'm going to look for Thursday to be our downfall. That's likely when I'm likely going to end up getting a starter position going into Thursday for puts, and that's what I'll be looking at. As of right now, I'm actually cash overnight. I rather I didn't want to pretty much take a flip of the coin. I'd rather just be here for the pretty much the day action tomorrow in for a day trade, and that's what I'll be looking at. But like I said, I'm gonna gauge towards that jobless claims on Thursday and the retail data. Let's see how the market wants to respond on the back end of whatever inflation data comes out, in which we're gonna be looking at the consequences of that inflation data coming out and how the market's gonna take into perspective of whether jobless claims end up ticking up, whether we may end up having bad retail numbers, how the market's gonna take that in terms of the tightening of the Feds in response to the inflation data. All right. The other key thing that I pretty much wanted to highlight, we also do have oil news coming out tomorrow as well. Those of you that pretty much saw in the chat, I think Avery was calling out pretty much a banger with Oxy. That was a hell of a chart. It is an ascending broadening wedge, but it should end up making its way towards the resistance before that has any kind of significant pullback. So that was a hell of a move. I also did have another oil name that was pretty much on the newsletter, so that was pretty much a banger so far as well. So that's another one to pretty much keep an eye on. Those of you that are aware of the newsletter, that was a hell of a move that we ended up having this morning as well. So keep that on watch. So all names, of course, will be heavily on watch, and then on the back end of inflation data, we'll see how the tech sector actually responds fairly fairly well. I do have biotech on watch. That's something I could probably highlight as well. I am pretty much, I don't know if I'm looking at some of the biotech ETFs, looking at XBI and also IBB, if I'm saying that ticker correctly. Those are two names that are for biotech ETFs that look pretty solid. I think we have some pretty solid price action. Looking at a few names across the board in those ETFs, they actually look pretty solid. So that's pretty much something that I am looking as well going into tomorrow. All right. Alobo, you want me to take a peep at EMPH? Let's take a peep at it. Let's see what's going on. Ooh, this is. Ooh, these cheeks are pretty close, I will say. The cheeks on this are pretty close. I think that when I last looked at this one, we were looking at basically this little daily flag, you can want to say it, the little descending channeling type of action here if you zoom in on smaller time frames. But that was a hell of a breakout over that 300 mark. That literally just went for it. But you had the nice little pullback, in which case I will say it's a nice retest off of that breakout. You retested that 298 to be exact level. And so I do expect us to have one more strong leg to the upside here. That will likely still take you up to that 337, 338 mark. But obviously, right as of now, you understand that what's pretty much is your floor is that 298 retest. Ideally, you would hope to get in as close as that 298, but I don't think you necessarily get any kind of meaningful pullback tomorrow on this one. So 298 again, that's your floor. If you're looking for pretty much a stop, pretty much above that 298, granted the fact that you're gonna try and consider a reasonable stop loss, I think this 304 mark is what you're looking at. As long as you hold 304, you're looking to take out this high from the 8th from last week, and you should end up pushing north of 325 and make your way up towards 337, 338. So I really like this one. The only thing I would caution about is if you see these pretty strong wicks to the upside on this upper trend resistance, just try to be cautious about not taking profits too late and then getting caught in the rollover. That's the only thing I will say on level. So make sure you secure your profits as you're closing into that resistance level. And I'm sure you're going to be one of those that actually end up holding it. And by the end of the week, it's likely going to probably be up about maybe what 200-300% by the end of the week. So just be cautious about the fact that once you approach that upper trend resistance, that you look to take your profits rather than getting caught in what seems to pretty much be a rash sell-off the prior two times of hitting the resistance. All right, but I love that play. I totally love it. Over 304 holds, 336, well, 337, 338, I think is on deck, and you should end up being well over 100% on that. If I anticipate you're gonna hold it how I expect. All right, so that looks pretty beautiful. Diego XOM was actually one of the newsletter plays, as you actually pretty much talk about it. That was a pretty beautiful play today. It actually held up pretty well so far. Kind of just giving you a gist and just looking at that. You had the nice curl up off of the 20 EMA off of the daily here from ending last week. So that was a beautiful sign. Once I started to see this curl, you can basically see the nice little ascending channeling action that you have going on here. You made your way into the gap fill here. That was above 98.62. Although you ended up giving back profits as pretty much tech was holding us up for the most of the day, didn't give oil much of room just yet. As I expect, as you see what Aldo was mentioning with OPEC tomorrow, that will likely be a catalyst for oil to give its no, its energy right back in terms of giving us that push more so. So I would expect continuation on this one right back into that gap fill, and we should get the completion of gap fill. If it's not tomorrow, it'll likely be on Wednesday. So we push right up to that $100 mark, and then we should test that pretty much that prior high from August 29th, right around 101 half. So I like XOM a lot. You could say that's pretty much within all of energy, within all of oil. I am relatively bullish. If there was one thing that I was going to end up pretty much swinging, it was going to end up being biotech or oil. I almost saw XBI calls, but I decided at the last moment I just rather be cash. And I'll wait for price action to pretty much tell itself tomorrow. But XBI or some oil name was likely going to end up being my swing overnight. All right. But I do like that one. Just to give you an idea on that. I did mention XBI, so I should end up showing you that chart. But that was a beautiful one that kind of stood out to me. If you look at the daily, if I pretty much zoom out here, that chart looks pretty beautiful here. Kind of giving you a little bit of a flash of a potential inverted head and shoulders on this one. Of course, to give you the confirmation of breakout, I would preferably like to see this break over that 200-day EMA at that blue line right there, over 90.21, and that would pretty much give me a better signal of this pretty much solidifying an inverted head and shoulders, and then getting the continuation up towards the neckline, sitting roughly around that 95 mark. So I think tomorrow this may end up being a beautiful one if we can get the move over the 200-day EMA over that 90.21. I think this is definitely worth an entry here. And at the very least, even if it rejects the neckline, that is still roughly about a near $5 move from breaking over the 200 EMA up to the neckline. So I like this one a lot tomorrow. I would definitely keep an eye, especially if tech ends up rolling over tomorrow for whatever reason. Keep an eye on biotech and, of course, keep an eye on oil. I think those two sectors can basically definitely rally tomorrow if indeed we end up getting some kind of rollover on tech tomorrow. All right. So that's pretty much one that definitely stood out to me. I was also watching a little bit of a similar situation. What was the name here? I don't think it's on my watch list here. I think I probably have to get it somewhere else. Yeah, I think it's on a different ticker. Okay, yeah, I gotta look at that one. I'll probably post it on my Twitter once I get to it, once I find it. But that was when I was watching. Another one that has my attention is also Amazon. I think Avery also dropped a chart on that one as well. But looking at Amazon, pretty much another one that's approaching right into the 200-day EMA here as well, sitting right at that 137.88 spot. So you're right within close distance towards that 200 EMA, which I would expect to pretty much be tough resistance to break over. I know that if I remember, I think it was like last week, that Avery was pretty bearish on Amazon. The chart setup to the downside was relatively looking pretty solid. I do expect this to take a pretty strong leg to the downside here. We basically have a little bit of a tiny room to complete the gap fill to the downside here once this does start to roll over aggressively. That's sitting at 122.84. So I would expect once we smack that 200 EMA, it'll likely be tough resistance. That may be the ideal point of entry for puts on this one. The only thing again I would caution is making sure you give yourself time on expiration. I think that's one thing that Avery's pretty much been also saying. Most of his positions have not necessarily been weeklies. That's pretty much one of the things that's actually helped him, and that's definitely helped me as well. Is that when you start to get into those weekly expirations, they definitely start to mess with you because now you're starting to lose premium a lot faster when price action doesn't go in your favor. So if you're looking for Amazon, I think this is a good one for a potential short here. Look at that short at 137.88 and just make sure you buy yourself some time on that one. So I like that definitely a lot. One that's pretty much pretty significant for upside here, and I actually do like this one, is sitting right here on Amazon. I think, well, not Amazon, Microsoft. Microsoft actually has some pretty decent upside that I'm still watching here on this one. You're basically sitting right around this 20 EMA off of the daily here. But I think once you do end up popping that 20 EMA at that 267.63 spot, I think you're going to have a little bit more of a run off of this one. It definitely felt like it took a backseat to what Apple's price action was today. I'll be looking at this one towards that 270 mark is what I'm going to potentially be looking at. So 270.04, I'll look to potentially look for a short opportunity on Microsoft. I definitely like the pretty much the fluid movement on Microsoft more so. So I'm likely going to end up pretty much shorting Microsoft more than so than maybe any other name. But Microsoft will be one. I'll look for that short right around that 270 mark potentially, and that'll be one that I have on my radar between tomorrow and the next day, and then hopefully that ends up being a beautiful play by the end of the week. So looking around that 270 mark on Microsoft for puts, I think that'll be a beautiful one. I haven't looked at Tesla too much today, to be honest with you. But Tesla had a nice rip today. I do think that this can push up towards that 308, 308, roughly, I want to say 309. It'll likely tap. This will be a spot as well. You look to see for a potential short off of that one. And off of that 309 spot, you're going to be basically risking here right around maybe that 312 mark as your stop loss potentially if you end up pushing north. So 309, I'll be looking for put stop loss roughly around that 312 mark on this one. But this one should end up paying out as well. Once this does start to roll over, I would anticipate that Tesla's going to take a pretty darn hard hit off of this market here. And that'll likely lead the way down for the entire tech sector. All right. So those are just a few names that kind of cross my attention right now. But right now, I think the bigger thing that you're going to want to identify once inflation data comes out tomorrow is look to see what sectors hold up. As I'm likely anticipating strength in biotech and oil, that could possibly lead to the downside of tech tomorrow, more so. So that'll be something you definitely want to keep attention is what sector's going to hold up, what sector's holding that relative strength tomorrow on the back end of inflation data. All right. But other than that, again, tomorrow's gonna be a wild card. Let's see what ends up coming out tomorrow. I know that Tom kind of outlined what he thought in terms of the numbers, how they're gonna reflect whether we're bullish or bearish. I think regardless whatever that number is, we're gonna end up ripping off of that number personally, and I'm gonna likely end up look for Thursday to be the downfall off of jobless claims and retail data to pretty much look to see the back end of the pressure of the Fed tightening. That's gonna be the consequence of that inflation data tomorrow. All right. So with that said, I'll leave it as is right there. Kind of went through quite a bit there, so we'll leave it as is. Let's see what sector gives us that relative strength, and we'll ride the wave. Otherwise, if tech really just drags us down entirely, then we already know what everyone's going to be looking at. They'll likely be looking at pretty much puts. Apple, Tesla, kind of just leading the way to the downside. And Tom is right on cue. Under 8, we rip. And I would assume then vice versa, over 8, he's going to end up pretty much looking for the downside. So, it's a wild card. The only thing I kind of feel like with oil going into tomorrow and biotech looking bullish, it does set up for tech to pretty much have a downfall. But what I'm looking at more so is Thursday having that jobless claims and that retail data to be the consequence of what's going to be our economic data tomorrow for inflation. I think we're going to look for that retail and jobless claims to be forcing that tightening, and that's going to be our downfall. So it could go either way. I think right now I'm actually more peaceful being cash overnight, and I'll wait for tomorrow's price action tomorrow morning at the open to see relatively whether we're going to have some overall broader market strength or do we look for specific sectors as that oil and biotech sector looks rather more juicy than tech right now. I think everyone feels like they're chasing right now. And one thing that I kind of noticed is that everyone's kind of starting getting those entries of puts. The only thing I would hope is that we do not end up ripping north tomorrow and everyone got an early entry and then plus on top of that you likely end up getting a short expiration. That would be my concern right now because right now obviously it does feel like you're chasing tech to the upside right now. There's no doubt about that. When you see how many green days we've already had, when you see a day where Apple's already ripped about near $6, it is definitely hard not to end up wanting to swing calls on that. But at the same time, you are looking for a face rip right now after all that we've already done. And no, inflation data, if we end up getting what Tom is pretty much looking at under 8, we rip, it'll be another gap up where a lot of those weekly puts are going to be down pretty significantly. All right. Mr. Cersei, I swung Apple calls over the weekend. Very juicy. That was a hell of a banger that you picked up. I know that Avery was looking at that. I think he announced it pretty much to everyone what his PT was. I think he was looking out towards that 164, 165 mark. And if I'm not mistaken, we got right around 164 half ish. If I'm not mistaken, for the half of the day. Yeah, 164.26. So just close enough. That was a hell of a banger. Tesla, that was a beautiful rip as well. But as we know, usually when the market starts to rip, it's rare when Tesla usually shows relative weakness compared to the broader market. But I would expect once we do start to roll over, Tesla will likely lead the way to the downside along with Apple. All right. So again, I will leave it as there. Kind of went through most of, if not most of the tech names more so. We'll see what ends up happening tomorrow, and I will conclude today's session there. All right, guys. Other than that, you guys.